Rand is firmer today as investors await the central bank's interest rate decision due at 3 p.m. In early trade, the Rand traded at 17 Rand 12 cents against the dollar. Roy Mutooni is with Sanlam Investments. He's an analyst there, and he joins us for the latest market moves. So how are we performing at midday trade? Good afternoon, Roy.
Hi, thanks for having me. So trade on the JSE it's flattish. I think markets are probably up less than 1%. It's mostly the resources, the dual listeds, the larger stocks that are doing well. And it just seems to be almost in a holding pattern, waiting to see the Reserve Bank's assessment of where the economic situation is and what they decide around interest rates.
Let's expand on that, right? So that interest rate announcement last year, we saw the largest increase in 2 decades. Is inflation cooling, and when should consumers expect some reprieve?
So I think we need to put it into context. This was in line with the rest of the globe. Every other central bank internationally hiked rates very aggressively following the US Fed, and that's why we've ended up where we are right now. So what are we seeing? We're seeing inflation definitely coming down, but it's still far off. Remember, the target is 4.5%. Inflation is still in that 7% level, so there's still some work to go. And I think that's one of the considerations the Reserve Bank will have today. Should they continue being aggressive despite the weakness in demand that we're seeing from company results, from load shedding and all of that? Should they keep the resolve, remembering that if they stop hiking too soon, this inflation will be with us for a lot longer than we expect. So I expect it to be a big balancing act. Maybe they go for 25 basis points instead of the 50 basis points they've done recently. But I think it's safe to assume that we're still on a hiking trend, though close to the top of that, to the top of the trend.
Yeah, and when you take a look at the latest statistics, South Africa inflation report, it is the everyday person that suffers the most, right, with the cost of necessities, particularly food, quite high, being hit by inflation.
Yeah, but remember, interest rates will not influence the price of food. That's a whole global story around what's happening with the Ukraine, the problem of harvests internationally. In South Africa, we're a little bit insulated from that because we produce most of our maize crop. But then what you're hearing with load shedding is that because they're unable to irrigate, in all likelihood, we may have a bit, not necessarily abrupt shortages, but I think prices may go up because of farmers' inability to irrigate. So it's a tough position. They can influence some things. They can't influence everything. But inflation is with us every day and impacts the rich and the poor. Disproportionately the poor because the food basket is a bigger component of their spending basket.
What about NERSA's approval of Eskom's tariff hike of 18.65%? Could that possibly play a role in how interest rates will move?
Well, the thing is, those are administered prices, and they fall into the inflation basket, so they keep inflation a little bit higher than was expected. I mean, 18% is higher than most people expected in terms of NERSA, and next year, remember, there's another 12%. So that puts almost puts like a floor on where inflation can go because it is a reasonable contributor to everything. But I think the Reserve Bank looks at these things, looks at the fact that higher electricity tariffs also detract from demand, which is what they're trying to bring down in hiking rates. So it's a complex decision for them. But yes, hiking electricity tariffs by 18% and then 12%, yeah, that puts a floor on how low inflation can go. That's for sure, once it's implemented over the next 12 months.
In company news, first it was Google, Microsoft, Amazon, BAT, and now Prosus and its parent Naspers are planning to cut their corporate workforce by 30%. How many are in South Africa, and what are the reasons cited for the layoffs?
So this is part of, exactly like you said, it's part of the growing trend in tech. Just remember, during COVID, a lot of these guys invested aggressively in engineers, in facilities and everything, because they saw a sudden uptick in demand for their products and for their services, believing that this was a new normal. Well, that clearly hasn't panned out. So a lot of them just figure Cut your losses now, get rid of the people, get rid of the facilities. Let's rather look for profitability because capital is more expensive now. It's harder to convince investors to continually throw money at them. Naspers and Prosus, for sure, that's exactly the same position they're in. They haven't actually spoken about how many are in SA, but clearly because it's corporate costs that they're trying to cut, there will be some heads here. Remember, in SA, it's a lot more complicated cutting people because you have to go through a legally mandated process. It's very difficult to know what numbers they're aiming at here. But yeah, for sure, it's one of those things that I think is going to happen. We've seen it in Microsoft, we've seen it in Alphabet, we've seen it pretty much everywhere, and Tencent, Naspers, Prosus are not the exception.
Scary stuff. So OUTsurance published a voluntary trading update for the 6 months ended 31 December 2022. What picture did they paint?
So it was a bit of a messy result with some inclusions and exclusions. But I think when you look at the bottom line, they're expecting continuing headline earnings to be up over 20%. And this is because of strong performance in Australia because they had better weather there and premium income growth. In South Africa as well, better premium growth and a better claims experience. So broadly speaking, I think from an operational perspective, doing relatively well. So I think that's good news to its shareholders. Remember, this one just listed recently. So yes, good news to its shareholders. We'll wait to see what the detail is when they release the full results soon.
Roy Mutooni is an analyst with Sanlam Investments. Thank you very much.